Hello, I'm Jason Pitarra, and today I thought I'd talk about clients over 62 years of age and on a fixed income trying to downsize or even upsize while retaining as much of their savings or nest egg. Doing a traditional, or what we call a forward mortgage for most of my mortgage career, I soon realized that most clients that go into a new home, living on a fixed income or fixed retirement, don't want to use all of their valuable cash. In the older ages, healthcare and expenses keep going up. So most clients want to use as much of their assets or save as and retain as much of those assets as possible. So it's a very common problem. And as our elderly population actually projected to double over the next 30 years, and only 20% of the baby boomers even feeling like they have enough savings or ahead of the game in savings, it's a very valuable tool. So basically, what we can do is set up retired families with a better alternative, and I feel like the reverse mortgage is a great way when looking to purchase a new home. What I find is the biggest misconception for someone holding back on doing a reverse mortgage, or maybe not even willing to talk about it, is that number one, the bank owns the property, or that the outstanding mortgage debt will be assumed or the responsibility of their heirs if something were to happen to them, and these just are not true. A reverse mortgage is actually a non-recourse loan, meaning we're not getting you to sign a personal liability that you will owe more than the house is ever worth. And the beautiful thing about the reverse mortgage is it's actually backed by the FHA office, which is the Federal Housing Administration. They're ensuring that the mortgage balance will never be more than the house is worth, or the insurance taken out by and on behalf of FHA loan is basically that coverage for So you or your heirs will never be responsible for it being upside down. So what I feel is such another powerful tool for the reverse mortgage. We recently had a client, they lost their spouse, spent their whole life trying to pay off their home, which in today's market is worth around $400,000. And this was most of the clients' what we would call net worth or asset. It was tied up into the home. And it was a humongous house, too big for the widowed spouse. And she figured it's time to downsize in this situation and keep some of that cash. With this particular client being around the age of 77, we determined they would need about 47% down so they could sell their $400,000 home, buy a $200,000 home and only bring about 47% of that price, keep the difference and never make another mortgage payment on the house to save some of that cash and extra money for expenses for the rest of her life. The biggest thing to remember about a reverse is you can downsize or upsize, doesn't matter. Depending on your age will determine the amount of the down payment. So if you're 62 years of older, you're thinking about upsizing, thinking about downsizing, please reach out. We're happy to answer any questions. We're happy to compare the differences between a forward and reverse mortgage and give you all the options you need.